Hi and welcome to Trade of the Week. This week's trade on the Dow relied on a total belief in following the trend. I missed this opportunity as I was caught up in thinking the market would spend more time around the 11,000 big figure, but it's a trade worth showing anyway. My initial call for the Dow to hit 11,000 had gone to plan. Okay, it happened 2 weeks after my call, but I'll take that. But the Dow didn't just hit 11,000, it piled through, hitting 11,054 on Monday morning. If I had been trading this, I'd been looking for a snapback to go long again. The index eased back to the 11,000 level during Monday, and Tuesday's early trade suggested the market might even have peaked when the price continued to fall, hitting in 10,944 after Alcoa's results failed to excite. But this was the point where the seasoned traders piled in to ride the continuing bull trend. Check out the huge hammer candle at 3:30 on Tuesday. This showed the bulls weren't done yet, and the following green candle confirmed the reversal. With an RSI back above 50, this would have been a good enough buy signal, but Captain Cautious here would have held off. The price was still just below 11,000, so I'd have waited for a confirmed close above the big figure. Instead, buying £6 at 11.12 after the 5:30 candle tested and held that level. What's in there? The choice of where to place a stop loss depended on risk tolerance and trading style. For the firm believer, a stop loss just below the day's low would give a trade plenty of wiggle room, but at 70 to 80 points below entry, that was too much risk for me on a £6 bet. The alternatives were either to reduce the bet size or to use a more aggressive stop loss. My own preference would be to use a stop loss 25 points below the 11,000 level. For me, this was still a key level, so if the price struggled to hold that, I'd want to be out fairly sharpish. My first target would be the 11,100 big figure, but the more technical level was the 200-week moving average at 11,132. My aim would have been to close half the position at 11,100 and run the balance with a trailing stop loss. So what happened? The index moved slowly higher into the close, taking an after-hours bid on the back of Intel's earnings. The following day the market pushed higher again, with comments from Bernanke helping the index through the 11,100 barrier and hitting my first target. The price pushed on to hit 11,123, but my balance would have been closed out on Thursday morning. Why? Because knowing the way I trade, I would have closed on the break below the 21-period moving average, especially confirmed by an RSI below 50. So in this case, I'll say I closed out at 11,105. And that was somewhere around there. So that would have been 88 points on £3, plus a further 93 points on the remaining £3, giving a pretend profit of 543 for a pretend risk of 222. This trade showed the benefits of continuing to back the underlying trend, safeguarded by a stop loss. Have a good weekend.